All right. Welcome back, everyone, for another deep dive. You know, we like to get into the nitty-gritty here, and I think today's going to be a really fun one.
Yeah, this should be interesting. A lot of ground to cover.
For sure. For
Mm.
sure. So today we're looking at advanced investing strategies. You know, you guys listening are probably already pretty familiar with the basics. We're not going to spend any time with index funds or ETFs or anything like that.
Uh-huh.
This is about leveling up.
Well,
Right.
exactly.
It's like, okay, so you know how to drive an automatic. Now we're teaching you to drive stick.
I like that analogy. Yeah.
Right. More control, maybe a lot more reward,
Hmm.
but it's definitely going to take some more skill.
For sure. Higher risk, higher reward, potentially.
Potentially, yeah, exactly. So we've got 9 big areas we want to hit today.
Yeah.
Asset allocation.
Yep.
Alternatives. Options.
Yeah.
Technical and fundamental analysis.
Two different sides of the same coin.
Right, right. Quantitative investing.
Mm.
Risk management.
Got to manage that risk.
Yeah, absolutely. Market timing.
Ooh, that's a tough one.
That's the holy grail, isn't it?
Yeah, exactly.
And then we're going to finish up with global investing. So asset allocation. What comes to mind when you hear that?
Asset allocation. Really, I think the key is strategic versus tactical.
Okay, strategic versus tactical. So what's the difference?
Well, strategic is kind of your long-term plan, right? This is how I want to spread out my money. Stocks, bonds, real estate, whatever.
Just that basic mix of what you want your assets to be.
Exactly. Tactical is more about, okay, I'm going to shift things around. Maybe I see a good opportunity over here. I'm going to take a little bit from column A, put it over in column B.
Oh, so it's a bit more active management then.
Right.
Interesting. And I know one of the big things with asset allocation is, like you said, it depends on your risk tolerance, your time horizon.
Absolutely. I mean, if you're, 10 years from retirement, you're going to allocate your assets very differently than if you're, 25 years old.
Right, right. If you're just starting out, you can afford to be a little bit more risky.
Exactly. You got more time to recover.
Yeah. Makes sense. Okay, so that's asset allocation. Now, what about alternative investments? Like, what even are those?
So alternative investments, this is where you kind of go outside of your traditional stocks and bonds. So you're looking at things like private equity, venture capital,
Right.
real estate, commodities.
Things that aren't publicly traded necessarily.
Right. Hedge funds.
Okay.
And so the idea here is, again, diversification,
Mm.
right? Getting your hands into different pots, so to speak.
Yeah, spread that risk.
Exactly. And potentially, there's no guarantees, but potentially higher returns.
Got it. So this is where those big swinging, home run swings could come from.
Right. But again, higher risk, too.
Of course, of course.
Yeah.
Okay, now let's talk options and derivatives, because those can be a little scary. Really.
Yeah. They get a bad rap.
Yeah, definitely.
But really, the idea with options and derivatives is they derive their value from some underlying asset.
Okay, so it's not the asset itself.
Right. It's like a bet on the asset.
Oh, okay. I see. I see.
So like a call option gives you the right to buy something at a certain price in the future. A put option gives you the right to sell something at a certain price in the future.
Okay. And you could use those in a lot of different ways.
Yeah.
Right? Like,
Oh, absolutely. You can use them to hedge.
okay.
You can use them for income. You can use them just to speculate.
So there's like a whole bunch of different strategies involved there.
Yeah, and we can't possibly get into all of them, but
Like a whole other deep dive, I feel like.
it is a whole other deep dive. But they can be very powerful, but they're also high risk.
Of course. Okay, so you're interested in some stock. How do you decide whether it's actually a good investment? There's 2 main ways to do that, right?
Right. You got technical analysis and fundamental analysis.
Okay, so break those down for me.
So technical analysis is all about looking at the charts, looking at the patterns.
Past price action.
Exactly.
Trying to predict the future.
Exactly.
Got it.
Fundamental analysis is more about the company itself. What are their financials? How much money are they making? What's their debt like?
You're kind of digging into the business itself.
Right. Their industry, their management team.
Yeah.
And you're trying to figure out, what is this company actually worth?
So it's like 2 totally different schools of thought almost.
It is, yeah. And some people are diehard one or the other. Some people like to combine them.
Yeah, I was going to say
Yeah.
maybe there's a way to use both of them together.
Absolutely. Absolutely.
Interesting. Okay, now this is where things get really interesting to me. Quantitative investing. What is that?
So quant investing is where you use algorithms and complex mathematical models,
So it's a lot of data.
tons of data.
Yeah.
And basically, they're trying to find patterns in the market that maybe humans wouldn't be able to see.
Because they're looking at so much data.
Right. And they can make trades much faster than any human can.
Right, so it's all automated.
A lot of it is, yeah.
Wow.
Yeah.
And are there like actual funds that use quant strategies?
Oh, yeah. Some of the biggest hedge funds in the world are primarily quant funds.
Wow, that's fascinating. Okay, so we're getting into these advanced strategies. We got to talk about risk management, right?
Absolutely.
Because obviously there's more risk involved.
Right. And there are specific tools that sophisticated investors will use. Things like value at risk or VAIOR,
Okay.
which is basically trying to calculate how much money you could potentially lose,
In a worst case scenario.
right, in a given period of time.
Yeah.
And then they also use stress testing, where they're basically trying to simulate different market conditions.
Mm-hmm. Like what would happen if...
What would happen if interest rates spiked? What
Yeah.
would happen if there was a recession?
Right. Just seeing how your portfolio would react.
Exactly.
Okay. So on to the holy grail. Market timing. Is it even possible?
Well, that's the million-dollar question, isn't it?
Yeah. Everyone wants to buy low, sell high.
Of course. And, some people have made a lot of money doing it, but it's incredibly difficult because you have to not only predict the direction the market's going to go, but the exact timing.
Right. When to get in, when to get out.
Exactly.
Yeah.
Yeah.
And it seems like even if you get the direction right, if your timing's off, you can still lose.
Oh, absolutely. And there's so many factors that can affect the market that it's just really, really hard to predict consistently.
Okay. So maybe not something to bank on then.
Probably not, unless you have a crystal ball.
Right, exactly. All right, last one. Global investing. Why would someone want to invest outside of their own country?
Well, there are a few reasons. One is diversification.
Always diversification.
Right. Again, you don't want to put all your eggs in one basket.
Yeah.
Another is that you can potentially tap into faster growing economies in other parts of the world.
Hmm.
There are a lot of emerging markets that are growing much faster than developed markets.
Right.
So there's potential for higher returns.
More risk, though, too, probably.
Of course.
Yeah.
More risk. You have currency risk.
Yep.
You have political risk.
So it's not just as easy as like, oh, this country's doing well, I'm going to invest there.
Yeah, you got to do your research.
Of course. Of course. Well, wow. So we've covered like a ton of ground here. This is really just scratching the surface of advanced investing.
Oh, yeah. This is just the tip of the iceberg.
Yeah, and it's really interesting to me how all of these things kind of work together. Like you could use technical analysis to find global investments.
Mm-hmm. Absolutely.
You could use options to manage the risk of your alternative investments.
Right. The possibilities are really endless.
Yeah. So what would you say, like if someone's listening to this and they're interested in learning more, where should they go from here?
Well, there's tons of resources available online. There are books, websites, courses.
Mm-hmm.
You can always talk to a financial advisor as well.
Right.
But I think the key is just to do your research. Start with one area that really interests you and just start learning about it.
Don't get overwhelmed.
Right.
Take it one step at a time. Great. Well, hey, thanks so much for taking us on this deep dive today. This has been really interesting.
It's been my pleasure.
Yeah. All right, everybody. Until next time, happy investing.
Happy investing.